if you hear the terminology PSP, payment service provider, the payment service provider um, can be a Peach Payment
Yeah.
or a Paystack or a Flutterwave, for
Yeah.
example, who will be owning part of that value chain.
And correct me if I'm wrong, but it seems now that Njiapay, the sweet spot is really mid, just below large enterprises, right? Who don't want to invest in the in-house capabilities, and who want to make that improvement from 60 to 70%, or 60 to 80%, without investing too much. Now, I think maybe just walk us through before we go deeper into that. Walk us through, just basic concepts such as auth rate and conversion, and churn, specifically in the context of a merchant. Like, what does this mean for you, like from your bottom line perspective? And potentially just throw around some numbers. Like, what is first of all, what is 70%, and what is the impact of moving to 90%? Welcome back to the F Squared podcast, where we explore the people and companies shaping fintech across Africa. Today, we're diving into the world of payments with Jonatan Allback, CEO of Njiapay. For those who don't know the backstory, Njiapay spun out of Talk360 with a mission to solve one of the hardest problems in African commerce, helping businesses optimize their payments and protect revenue. Jonatan brings a unique perspective, having spent years at Adyen, where he saw firsthand how global enterprises think about gateways, processors, acquirers, and PSPs. Now he's applying those lessons in South Africa, starting with card payments and building for scale across the continent. In this conversation, we'll break down the nuts and bolts of the payment stack, and cover where revenue is most often lost, and explore how companies should think about fraud, churn, conversion, and customer experience. We'll also look at the bigger picture: what matters when choosing a PSP, whether on-chain payments have a role to play, and how strategies from South Africa can extend across the continent. Stay tuned, it's a masterclass on payments from the ground up. So Jono, thanks for the show. And thanks for joining us on F Squared. We've been meaning to have this discussion for some time, so really good to have you on the show. And first of all, just a quick intro, and then to yourself, and then we can get into Njiapay and the story behind Njiapay, specifically how it spun off Talk360. Would really like to get some cool insights on that.
Sounds great. Yeah, I'll do a quick intro here about myself. So,
Yeah.
Jonathan, born and raised in Sweden, but left Sweden when I was about 20 to move over to the US. Attended college there. I got a soccer, as they call it, scholarship. And spent about 7 years on the East Coast. And that's also where I started my career.
What position did you play?
Oh, defender.
Okay.
I love the right back, man.
Okay.
Just running up and down on the right wing.
Very
So
cool story.
it's still play a little bit here and there, but the older you get, the
Yeah.
less I play. But
The knees
we can talk
start.
about football another day, maybe.
Yeah.
So no, and that's so I did a short stint on Wall Street once I graduated from college, and then ended up joining Royal Bank of Scotland in the payments division. This was 2011. And at that point in time, Apple had just announced the first iPhone, and the head of US payments sort of said, "This is the future of payments," and he was spot on at that point in time.
Yeah.
And that was my first sort of introduction into the complexity of the payments ecosystem that you as a consumer has no idea about, which you shouldn't.
Yeah.
Then after a year there, moved back to Europe and was fortunate enough to join the Dutch now global payment provider Adyen. And for the ones who don't know Adyen, it's a really success story from a European perspective. It's almost 20 years old now, and I think the last numbers they did about 1.3 trillion in volume So it's really getting up there.
Yeah.
And joined them in 2012 as an account manager in Amsterdam. We were about 100 people globally. Did 3 years, worked with some Nordic companies like Spotify, helped launch them with Adyen and roll them out in multiple countries, and then moved to California and spent about 5.5 years with Adyen in San Francisco. So first 3 years was as a head of the account management team there, worked closely with all of the big guys in the US. Think Microsoft, Netflix, Uber, Facebook, and the likes.
Yeah.
And did that for 3 years, and then spent the last 2.5 years with Adyen helping eBay migrate away from PayPal onto Adyen for Platform. And it's quite an interesting experience because eBay at that point in time were doing about 80 billion in GMV revenue and had never touched the payments part because they had relied on PayPal
Yeah.
for
Yeah.
eternity, and they of course owned PayPal for a while. And
Yeah.
now they started to building out their own managed payments platform in-house and decided to have Adyen power it. So spent 2.5 years sort of helping lead the project team internally at Adyen. And then we rolled it out in the US and Germany and the UK. And then COVID, as everybody has knows, hit in 2020. And it wasn't the same then, sitting like this, working with the people that you had worked with for so long.
Yeah.
So beginning of 21, I decided to leave. I enjoyed skiing more than I enjoyed working. Let's put it that way. So, and Adyen at that point in time, we had gone public in 2018.
Yeah.
We were 2,000 people now, so it had changed quite a lot.
Yeah.
So I wasn't enjoying it, so decided to leave
Yeah.
and started consulting. And was doing that until I joined Njiapay last year.
Got it. No, it's very interesting background and really, really deep payments experience, especially with large orgs. I like the story about eBay because they were tied at the hip with PayPal for so long. And I read the founder's book, that talks about some of the early battles between PayPal and eBay. So very interesting to hear that. But now coming to Njiapay, my understanding is that it came off of Talk360.
Yeah.
Talk360 was a calling platform that enables people to make international calls, and they had a problem with payments and especially collecting payments across the continent.
Correct.
And the core team there decided to start Njiapay. Maybe walk us through that founding story for Njiapay out of Talk360.
Yeah, no, and it's a really good summary. So in about 22, 23, Talk360 was growing quite rapidly, had a lot of interest from consumers, but payments kept on being the bottleneck for them to grow.
Yeah.
And you're based in Kenya, and the PSP that they were using in Kenya required them to fill out a number of fields on their checkout page that were irrelevant to Talk360 and also irrelevant to the likes of an M-Pesa as a payment method. So they saw very, very low conversion. And that was sort of one of the spark to build the first version of Njiapay. They had just gotten their 7 million euro seed round as well. So they allocated funds because they also, what you got to realize is they're a small company at that point in time. I think there were about 25, 30 people. And their engineering team had to maintain up to 6 different PSP integrations. And as you can imagine, their finance team now had to deal with 6 different reconciliation files and settlement files.
Yeah.
So they sort of said, how can we streamline this? And they decided to build out what we call now Njiapay. And in 24, when they had launched it, they saw a tremendous success. They saw a 25% increase in conversion across the board. And Kenya, to use that as an example, once they were able to control the checkout page themselves and the fields that they required their users to input, they went from seeing $5,000 in sales grow within 6 months to $25,000.
Yeah. Yeah.
And that's just in one market alone
Yeah.
by optimizing the checkout for conversion.
Mm.
So then in 24, the board made a decision because they had, of course, looked at all the providers across the continent to try to find a solution that worked for them, but they couldn't find one.
Mm.
And at this point in time, they said, okay, is this more valuable as a standalone business, or do we control it in-house? And they
Yeah.
decided that let's spin it out.
Mm.
And that's also sort of how I got involved with Talk360 as well, and in Njiapay, because I had started advising an entrepreneur out of or a Nigerian entrepreneur living in the Netherlands,
Mm.
who wanted to build sort of an online banking solution for Nigeria to solve for the manual bank transfers.
Yeah.
And I was doing sort of market research, and I had heard about Talk360, and one of my former colleagues, he knew Hans, the founder of Talk360. So I reached out and said, hey, do you mind putting us in contact? I would just want to understand what they have built and the challenges they have faced, and what he can share about the payment side. And little did I know that, of course, at the same time, Hans was looking for a business leader to lead in Njiapay.
Yeah.
And I came with a little bit of a naive, the Western mindset, because I had solely worked in Europe and the US. Of course, Agile is global, so we had operations across the continent. But Africa is and was back then also a continent that was sort of neglected by a lot of the large
Yeah.
players.
Yeah. Yeah.
South Africa, we had partnerships with the likes of PayU. Of course, I knew about M-Pesa. I knew Flutterwave and Paystack just from being in the industry. So I was thinking, Flutterwave, $3 billion company, Paystack bought by Stripe, 300 million. They should be able to solve this challenge that you are telling me that you are having. And Hans basically explained that no, because in the various countries that we operate, Paystack might be fantastic in Nigeria for us, but in South Africa, we have different challenges. And Kenya, it's a different story. So he convinced me to come on board as an advisor, consultant, and see what they had built and the challenges firsthand. And honestly, after a few weeks of working directly with Talk360, I was convinced and decided to join the journey.
Very interesting. And it I've come across this problem, at least speaking to people, even in Kenya, as you said, most people say like, M-Pesa is solved, payments is solved. But there are a lot of companies that have to build internal teams just to deal with reconciliation workarounds. Like when you get this payment, how do you attribute it to this kind of income line? And there's so much like work that needs to go on in the background.
Yep.
But for the rest of the continent, you'd imagine that listen, as you asked Hans, like there are quite some sophisticated players, Paystack, Flutterwave, DPO, Stitch, everyone. That you'd imagine that listen, this should be solved. Now, before getting into like asking that question directly, I think the best way is to just now look at how payments work, right? And so that we can now come to understand like where the bottleneck is. Now, you started with SA. I think it's your beachhead market in Africa. Makes sense. Advanced card market, higher incomes, much more advanced e-commerce and subscription business. They are gaming than most of the rest of Africa. So probably just walk us through a card payment, like you know, be as sophisticated as you need to, but not too much that you lose typical audience. And just like
Yeah.
what things like what a gateway is, what a processor is, what an acquiring bank is, and how money moves from your once you swipe the card to the e-commerce company.
Yeah. And I think that's a great place to start. To really understand the complexity of payments, you really need to look underneath the hood. And so I think traditionally there were a number of players, and they were all different companies. So you had your gateway, which is more of your technical party. think about it from what's it? The best analogy that I can think of is the gateway is sort of a waiter in a restaurant. It's the one that takes the order and then passes it on to the kitchen.
Got it.
And then the kitchen will sort of say, do their magic, and of course a dish comes out. So it's sort of just the middleman.
Yeah.
It's the technical layer for the merchant in order to be able to connect to the processor in a very secure manner. Because, of course, you don't want any company that has a website to be able to collect card details, which is a very sensitive piece of information. So you need that technical, secure middleman that can operate online and also in store. So that point of sale device is usually the gateway.
Got it.
And then that gateway passes on the card details onto a processor. The processor, it's really the engine of a card transaction. It's the one that takes all of that information that it gets and securely.
And sorry to interrupt, but
No.
could you tell us like what the basic details are being obtained? Like what are just the basic details? Card name, client name, amount. Just basic details.
Indeed. So it's the card, it's the name, and usually some additional information that they can derive from the checkout page in order to also run some security checks on the shopper itself. And then they will have information about the merchant as well, that they will know what type of business is it. Is it an online retailer? Is it a gaming or gambling company? Is it a media, digital company? So they'll have that information on the businesses that they are collecting the card details from. And then they'll pass that information on to the processor. The processor then puts that into what's known as an ISO message. It's sort of the international standard for technical communication. It's been around for decades. It's just one of these terminologies that you don't really hear about a lot unless you're in the business.
Yeah.
And that's a really complex part of the payments ecosystem. Then they send that information on to the likes of the networks, MasterCard, Visa, Nigeria, Verve, Amex. And they are then connected as well to the acquiring bank. So the processor, it used to be, and it still is to a certain extent, companies like ACI, which is a global, very large conglomerate payment company out of the US. First Data is one of these legacy that was acquired or merged with Pfizer, who was also a processor. So these businesses, one of their main core was to be that processing part for the banks. Because what you got to understand, if you look back 20 years plus, of course, online was not as critical or as heavily used as it is today. So a lot of the banks were the acquiring banks solely, and they were leveraging a third-party processor who were then connected to a third-party gateway, which is how the industry looks today in most of the African countries. And most of the providers that operates across the African continent today, and especially in South Africa, where card is very dominant, has this same setup.
Got it.
And slightly different from US and Europe and other more developed markets, where Adyen, for example, they started out as a gateway, and then they, at the same time, built out their processing platform, and then became an acquiring bank. So they now own that whole value chain from the gateway to the acquiring bank.
Yeah. So makes a lot of sense, and so the acquiring bank is the person who acquires the merchant, like is dealing onboards the merchant into the broader ecosystem, right? And so a payment comes from the gateway, it goes into the processor, then goes to the acquiring bank, and then that's how the payment is received. Now, within that kind of ecosystem, Like where are things breaking? At least for Talk 360, where were things breaking? Like who was
Yeah.
dropping the ball, or is it like all of them are dropping the ball? Like just to understand the problem that needs to be solved.
Yeah, and this is also where I think the one part I would add there is if you if you hear the terminology PSP, payment service provider, the payment service provider um, can be a Peach Payment
Yeah,
or a Paystack or a Flutterwave, for
yeah,
example, who will be owning parts of that value chain, but in most instances will be leveraging third party. So they might be leveraging a acquiring bank, ABSA, Standard Bank, FNB, etc. And they, of course, have systems of their own. And it, as a merchant, you will never truly know where across the value chain or the ecosystem a payment will fail unless you'll get a proper message returned back to you saying, hypothetically, 3D Secure was not authenticated because of technical error. Most likely that means that the 3D Secure two-factor authentication provider had some technical issues. Or if you get issuer unavailable, then the PSP did everything it could do, but the issuer was actually the one who had the problem. Or in some instances, you have acquirer error. That's when you know that the acquiring bank was the one who dropped the ball.
yeah,
But that's the challenge with some of these legacy and fragmented ecosystem is you will truly never know uh, unless the responses back to you as a merchant are clear enough that it will tell you this was the gateway who had issues,
got it.
etc.
Got it. So, and what's coming out is that, if you look at an RDN in Europe, for instance, you're controlling the entire ecosystem. So you can onboard merchants. Like when RDN is onboarding PayPal, like we have a full agreement between RDN and PayPal. And this covers everything from acquiring to processing to gateway services, the entire thing. So for PayPal, it's like if anything goes wrong, uh, you know, it's 100% on Ardian's door, right? And I
Yeah,
can sign SLAs that say I'm going to verify that everything, at least to my best effort basis, I'm going to give you 99.99. So as PayPal, all you have to do is give me the data that shows that you have 99.999% availability. That's all you need to validate, right? And that's the selling point. And you can see it in their communications, like, oh, Black Friday we had 99.999% kind of whatever.
exactly.
Now, for
No, and the one part that I was going to say that I forgot to mention is there are, of course, also responsibilities of each of these parties.
yeah,
Like I mentioned, the gateway needs to be having a PCI level 1 certification, sort of the payment card industry standard from a security standpoint. The acquiring bank, they are the ones who take the liability. They are
yeah,
the ones who have that risk with the merchant, as you mentioned,
yeah,
that if there is a chargeback, the bank is the one who's liable for that to ensure that the merchant has enough balance that can cover the chargeback
yeah,
or refunds,
yeah,
etc.
yeah,
The processor, it's mainly the middleman that just connects all the dots and passes the data from the network acquiring bank and the gateways.
and so looking at the example of an Ardian, and in Africa, you have a PSP, let's say Flatwave, Paystack, or everything. So they're working with, let's say, Absa in South Africa. And do they also provide gateway services, or they're also working with a gateway company? And therefore, like, there are much more moving pieces. Like, explain the typical African stack,
Yeah.
just to understand.
In this scenario, Paystack is the gateway, and but they also offer more services than just that technical layer.
Yeah.
In Njiapay, we are more of a gateway than Paystack because we're not in the money flow.
Yeah.
Paystack is in the money flow, which is why they are more of a PSP because they have that connection into ABSA and they have a partnership with ABSA where ABSA is their acquiring bank and they are able to settle with ABSA, but then they are the ones who are moving the money from ABSA to the merchant in this case.
Yeah,
So
yeah.
they are more a PSP, and another terminology within the payment space that is known as a payment facilitator that allows them to collect and move funds. So they have to have that license, which is in South Africa known as a third party payment processor,
Okay.
which allows them to move. So they have a gateway, but they are more than just a gateway as well.
Got it. Makes a lot of sense. And so the fragmentation is where it's essentially what I'm hearing is that there's a black hole element to this, right? That without that kind of full control, like the entire stack that potentially a Stripe or an Adyen has, is that sometimes even if you're a Paystack or anyone else, that sometimes you don't know where things are failing, right? Like you might not know where things are going wrong.
Indeed. And it's even if you do, the challenge there is, of course, it's not in your control.
Okay.
And I think the beauty of Adyen was the founding story is they started a company, a gateway company called Bibit in the 90s. And then that was later sold to Royal Bank of Scotland and is one of the platform that is sort of part of the WorldPay brand today. They saw the challenges firsthand in the beginning of 2000 that some of these newer technology driven companies were pushing them for, because they wanted to better understand why is a transaction failing, what's the issue. And then also the networks, they always comes out with these great products like network tokens, account updater, click to pay, etc. When you want to implement some of these products as a PSP, but you don't own the whole value chain, you are now dependent upon third parties in that value chain to ensure that you are able to offer the products that your merchants or clients want to get access to. And this is also where the issues are one part, but the lack of control of your own destiny is the second part that is also causing some challenges when you're looking at the legacy infrastructure, which is, I'm extremely excited about Stitch, who is now sort of bought that processing platform, the switch, the direct connection into the networks. And there are a handful of other companies in South Africa that have now gotten their acquiring license, so they can now have more control of these payment value chain providers and parts, because that's really what has been missing is one, that control. So you can now go to Stitch and say, well, hey, why is it that these payments are now still failing? And then you can go and say, hey, we want this product. And they then control their own destiny, and they can fairly simply add them. And that's also what is missing from some of the fragmented ecosystems across the continent.
Got it. And so it seems to me there are two ways, and actually before we go to that, because it's an interesting one, I think the big thing now for me is that understanding that problem. How does Njiapay then go around solving it? Like, how does orchestration work in this context? Like, what unique knowledge do you have, or what unique capability do you have that solves this problem?
Yeah, so orchestration can help solve this problem indeed. And I think orchestration is a term that has been thrown around a lot over the past couple of years.
Yeah.
And that's why we position ourselves more as a payment management platform with orchestration capabilities. We're not just pushing the orchestration part. Orchestration can help by understanding that Paystack, leverages a third-party processor, let's call it ACI, and connects into ABSA. If you truly want to be able to leverage orchestration providers or capabilities, you want to make sure that the second PSP that you're implementing has a different processing platform, not ACI, and is connected to a different
Got it.
acquiring bank than ABSA.
Got it.
So now you have two rails. The challenge with this from a merchant standpoint is you need to become PCI compliant in order to leverage the two routes, or you now need to have two separate PSP tokens that you need to manage between the two. And that's where the orchestration part of our platform and other providers out there can help solve that part. And then the second to that is if it fails, if you send it to Paystack first and it fails, then in the background, within milliseconds, you can retry it over the second provider. Let's use Flutterwave as an example, and see, does it succeed? Was there an issue on the side? You can, of course, also determine which refusal reason. So if you get back insufficient funds or card lost or stolen, you might not want to try it immediately over the second PSP. But if you get a generic do not honor or acquire connection, technical issues, then of course you want to retry it. And that's sort of one of the orchestration part. And then you have the redundancy part as well, where you mentioned Black Friday, which is coming up. And we know that puts a lot of burden on some of these legacy systems. And you want to make sure that if that PSP goes down, within seconds, your system will identify connectivity issues, put that PSP in the penalty box, and route all the traffic over to the second PSP. And that's sort of also what the orchestration part of the payments management platform that we offer can help clients with.
Yeah, and it seems that there are two ways to solve this problem, right? There's the route you're taking where you're saying like we'll be a gateway. We have knowledge, we have payments knowledge. We understand how the entire ecosystem works, and therefore the way you solve this is through orchestration. Is through knowing how each of the PSPs is set up and understanding how to reroute transactions and all that kind of stuff. And there's a route maybe where Stitch is taking where it's saying like, listen, we'll go the full stack and we'll control the payments experience, right? Now potentially, do both of those coexist in a market and build successful companies, or will merchants prefer to choose one over the other?
Yeah, good question. And I would say it's the former, because if you look at more developed, larger countries, both do coexist today.
Yeah.
And this is also where why I'm also sort of not shining away from the payment orchestration part, but I try not to emphasize that as much as the payment management platform and sort of what we position as payments with a service. Because if a company comes to us and say, hey, we are with PSPA, this is sort of our industry, this is our challenges, this is our setup, they might not know, because they don't have a payment manager in-house or payment knowledge, which PSP is best for them. And that's really where we can sort of help. And it could be that Stitch has everything that they are looking for. However, Stitch is also just one provider. They have a processing platform. There is a reason why all the big guys, if you look at in South Africa, for example, Superbalist, Bash, Takealot, they do have two PSPs. And if you take that sort of on a global scale, Microsoft and Netflix, they have two, potentially even three PSPs in all of their key markets, because they know, and this is where it becomes extremely complicated to explain the rationale behind some of the refusal reason and the successes. But they know that in order to truly optimize, you need two acquirers and processors. And of course, from a security redundancy standpoint, it's just best business practices. So Stitch might be perfect for a company and they could solve 90% of their challenges. But if you truly want to optimize and make sure that you have that redundancy and security, you need a second PSP. That's sort of and during my consulting years, that was always one of the first advice I gave a merchant who was big enough, and we're asking, how can I optimize? And then you always say, in order to truly optimize, Agent is great, but I always would say to those clients who are using Agent, you need a second PSP, because Agent could get you to 95, but in order to get you to 98, Agent will not be able to do that solely by themselves. And that's also where, depending on the size of your business, you might be happy with 95. You might not want to invest in the capabilities of getting to a 98. But if you're large enough, or in parts of Africa as well, and this is where in emerging market, that 95 might be 85, because the average auth rate, we can use South Africa, the average auth rate in South Africa that we are seeing is between 65 and 75. Visa, MasterCard, Amex, Adyen, because Amex is different, but Visa, MasterCard, and Adyen, they use 85 as an average card not present auth rate across the globe. So that means that in South Africa right now, you're 10 to 20% below the global average. And that the reason for that is because of some of the things that we talked about, the legacy and the fragmented ecosystem. So Stitch could now help you potentially get up to that 85, 90%. But you still need that second PSP if your volume is big enough in order to get to that 95 plus percent.
Got it. And I think, and correct me if I'm wrong, but it seems now that Njiapay, the sweet spot is really mid, just below large enterprises, right? Who don't want to invest in the in-house capabilities, and who want to make that improvement from 60 to 70%, or 60 to 80%, without investing too much. Now, I think maybe just walk us through, before we go deeper into that. Walk us through, just basic concepts such as auth rate and conversion, and churn, specifically in the context of a merchant. Like, what does this mean for you, like from your bottom line perspective? And potentially just throw around some numbers. Like, what is first of all, what is 70%, and what is the impact of moving to 90%?
Yeah. So the basic auth rate example there is 70% is that 100 transactions were attempted, and 70 of that was successful, which means that 30 transactions were refused. And that could be by the issuer or because there were technical issues. And then that's where you have to look at the refusal reasons in order to identify that. And of course, if you are selling items for 100 euros or $100 or 100 South African rands, that means that 30 transactions were now lost. So you lost 3,000, which means that you can now, if you increase that to by 10%, you gained 1,000. So of course, if you're processing 1 million euros or USD or South African rands a month, that means that 700,000 was successful, but you left 300,000 on the table. So of course, a 10% uplift is quite substantial from a monetary value. So that's sort of the basic auth rate, where you look at successful transactions, and conversion rate. It's more how many of the consumers that landed on the checkout page, and as a payment provider, and in South Africa, hosted payment, meaning that the payment checkout page where you actually input your card is owned by the PSP or the gateway, Njiapay or Peach or Paystack. So depending on how many shoppers or users landed on that page did actually attempt to pay. And it could be that they landed on the payment page and they didn't see their payment method that they prefer to pay with. It could be that they were not able or to check out because connectivity issues. So that's sort of how many of the uh, intended users or shoppers actually did check out. And of course, from an online retailer's perspective, this is where you look at the cart abandonment rate and see how many actually completed the full checkout, because for them, conversion rate is, of course, a lot more important.
Yeah.
I think for some of the it is important to look at auth rate for those type of businesses as well, of course, but conversion rate might be more important for them to look at.
Yeah.
Churn is extremely important for subscription businesses, and auth rate is extremely important for them because Netflix, they derive the majority of their revenue from subscribers.
Got it.
So if they have 1% churn in their business on a monthly basis, that's of course a significant amount when you do 40 billion in revenue or as such. And that's where involuntary churn, where the user did not intend to cancel their subscription, but payments were the main reason why it was canceled. Could be that you switched bank or you lost your card or the card expired and it had to update it,
Exactly.
etc. So that's sort of how churn is playing a vital part for the payments ecosystem.
And I understand the auth rate issue. At least I understand how Njia solves it. Do you do anything around the conversion rate, or is it just an exercise in testing multiple methods and seeing how do you improve conversion rate? It's more like A/B testing kind of thing.
A/B testing is a great way to look at conversion, and I'm a data guy, and I always think A/B testing, let the data speak for itself, and then you can play around with two hosted payment pages and see which style converts better than the other, if there is any differences. But where we can also help and where I would advise any client to think about is, one, which payment methods are used by your demographic? That's number one. Do they prefer one over the other? And do you have the ability to enable that? And that's one of the key questions we get from clients is, hey, we are thinking about adding a PSP because our existing PSP does not support the buy now, pay later method that we want to add. So we can then enable that that buy now, pay later method on our payment page in order to see, does it actually increase conversion?
Yeah.
And then secondly to that is, you don't want to just add all payment methods on your checkout page, because then you might cannibalize the checkout and sort of confuse the shopper where they have too many options.
Yeah.
And last but not least, you want to make sure that you communicate with your customer at the point of checkout. Is there an issue with 3D Secure? Then tell the customer that when they are trying. Don't just tell them card did not work, it failed, payment declined, try again. If the bank says insufficient funds, then inform the user that you're trying with the card that your issuing bank claims that you don't have cash on.
Yeah.
Try again.
Yeah.
So they'll try a different card or try a different payment method. That communication is also something that you can help increase the conversion rate to really make sure that at the point of checkout, they do use the payment method that will be working.
And so the value I'm seeing here is simple. Like, work with Njiapay. You don't have, or you may not have, the sophistication to in-house increase your authorization rates, right? Because that's the key revenue driver I'm seeing. Like, that's the key lever when it comes to at least both of them, both auth and conversion. Like, you fix those two levers and your revenue can jump by 10-20%. And therefore work with us. There's a fee involved, and we'll help you increase conversion rates, right? And that seems like a mid-market proposition, at least mid to just below. But what I've seen in Africa, at least in many parts of the world, is that people always assume that the big guys have everything in order. And once they go and speak to them, they're always like, actually, this is a major problem for us. Have you seen that in your conversations with clients in South Africa?
And you mean the biggest
Yeah,
businesses or
the
the
big
biggest
businesses,
PSP?
the big
Yeah,
businesses.
no, absolutely.
Yeah.
And it's one of the surprises is some of the larger enterprises across the continent that we've spoken to. They also struggle with this because I think in the end we are all at the mercy of the underlying infrastructure that payments is being run on
Yeah.
across the continent, and I think that's the one excitement that I'm starting to see is the innovation that is now happening in the underlying payments ecosystem and infrastructure, because you can, and I mean, I'm not sure, I will not mention the name, but we've spoken to one large online retailer who, over the past 5 years, have invested heavily on optimizing their payment, and hired a team of engineers to focus on this internally, and they were able or have been able to solve it. And they were able to increase that auth rate from 70 to 85, 90% by investing the number of engineers. And they have between 5 and 10 engineers focusing on payments in-house right now. But that's the challenge with the tier 2 or tier 3 enterprises or the mid-market clients. They don't have the resources that those larger guys do have, and it's
Yeah.
not just Africa, it's everywhere. Like Microsoft and Netflix, they have hundreds of people focused on payments. There are companies out there who does a significant amount of revenue but they might have 100 people within the whole company,
Yeah.
and they
Yeah.
might have one or two engineers
Yeah.
or product managers or ecom manager focusing on payments. So of course those are the type of businesses where payment orchestration or Njiapay can really help, because then instead of hiring a team that you have in-house, you can outsource it and get access to all of the features and functionality. The one thing I will always, which is also why I'm sort of shying away from purely focusing on payments orchestration part, is when I was a consultant, I got hired by companies who had integrated in a payment orchestration provider, but didn't have the right knowledge in order to operate the payment orchestration provider. Because it is a fantastic platform where you have all the tools, bells and whistles, but you still need the knowledge to know, where do I connect, how do I optimize here, where do I look at what data point. And this is where it would be like asking some one mechanical engineer to fix an engine in a car that he has never ever worked on a car
Yeah.
before.
Yeah.
He
Yeah.
might have the background and the knowledge of
Yeah.
the mechanical engineering, but not the car itself. And that sort of, again, orchestration is a fantastic tool, but it's not the end all, because you
Yeah.
still need that knowledge.
Got it. And so how do you contract, and where do you sit between, you've got your, let's say, mid-sized e-commerce company in South Africa doing $40 million in revenue, not big enough to fully, build internal capabilities like some of the larger players. Where do you sit in that ecosystem? So there's you, and there's potentially two or three PSPs. How does that interface? Do they sign an agreement with you, integrate with you, and then now you integrate into their PSPs? How does that work mechanically?
Yeah, correct. So we become their payment platform and the payment integration. So they do one integration, and we have the integrations into the PSPs
Yeah.
that they want to work with, and then they will have the contract directly with the PSP. So we always say that for us, we want to create a triple win: a win for the merchant to sell more, a win for the best performing PSP
Yeah.
that so they can earn more, because they negotiate the fees directly with the merchant, because they are also the ones who will settle the funds directly to the merchant. And then it's a win for us because we keep the client happy, and of course we charge a monthly fee for the use of our platform, of course.
And so here the kind of trade-off is that you're introducing new vendor risk that that goes against the like the balance of having it goes against your advice as a consultant. But the reality is that you're introducing this idea of like, listen, this is the kind of trade-off you have to make
Yeah,
more revenue, right? Like that's basically what the discussion is.
exactly. And
Yeah.
I mean, my answer to that, because you're spot on, right? That's indeed a risk that the merchant needs to take. And my answer there is, if Njiapay goes down, the broader internet will have issues, because we run on GCP, Google Cloud platforms. We have two instances from a security standpoint.
Yeah.
So we have one data connection in Africa and one in Europe, in order to sort of minimize the risk there as well,
Yeah.
because GCP can go down in one part of the world, but it's still up in another. And that's sort of how we try to mitigate the risk of relying on one party, of course.
Got it. And how's business going so far? Like, what kind of traction are you seeing? What kind of names are you onboarding?
Yeah, I wish I could disclose some names, but so far
An exclusive
we're
for the podcast.
yeah. Yeah, no, so it's been extremely good, to be honest, and we've sort of in contractual negotiations with some companies now that hopefully in a month or so I can disclose the name,
Got it.
because of course that's part of the contractual negotiation.
Yeah.
But no, I've been surprised, and we have gotten some traction from small startups to really large companies in South Africa. And yeah, we're focused on South Africa today because of two reasons. One of the co-founders out of Talk360, and Talk360 is also based in South Africa. So that was sort of our initial market where we started talking to a number of clients, and then we realized that there are significant amount of companies in South Africa alone that could use Njiapay and could benefit from it. Our vision is still the Pan-African play, and that's where we truly believe that we can play a vital part. Because if you look at it from an international standpoint, there are a handful of companies, of course, that are doing it. dLocal is one, but they are also just focusing on the biggest of the biggest. But that's also where the true complexity comes into play, where you might have to work with 2 or 3 merchant of record providers because you don't have local entities in all of the markets. And you really want to make sure that, again, the biggest is not always the best. So not to pick on Flutterwave, but I will use them as an example, is they have 30 licenses. But that doesn't mean that in each of those 30 markets, they are the best provider for your business.
Yeah.
So that's sort of where we are playing. And yeah, you'll see some more announcements coming out of Njiapay in the coming months. And yeah, that's all I unfortunately can share right now on that traction.
No, congratulations. I think we spoke 6 months ago, and it's good to see the progress you've been making. But speaking of the rest of Africa, right? Like, as you rightly stated, Africa is extremely fragmented. No two markets are the same. Payment cultures are different. How do you see this working in a non-card market like Tanzania, Kenya, let's say East Africa? It,
Yeah.
it, it might not travel. And what kind of conversations have you had? At least, what do you understand about how Njiapay would add value there? Whilst you don't have to do it now, I'm sure it's something that is percolating in the back of your mind. Like, how will we solve this problem?
Yeah, yeah. First and foremost, you're spot on, right? And it's Africa is always talked about as one place, and it's like sometimes Europe is as well, but then you realize how many different countries, cultures,
Yeah.
and from a payment standpoint,
Yeah.
payment methods are
Yeah.
actually being used and payment systems. I mean, of course, read your newsletter this morning as I do every week because I think you highlight some of the innovation that is happening across the continent. And Tanzania, with their instant payment
Yeah.
system, is of course growing.
Yeah.
And this is why I think from a Njiapay's perspective, we are keeping tabs on all of the relevant payment innovation that are happening across the continent. Because in order to truly offer a client the best solution, regardless of which countries they are looking at, you need to have the local payment methods. And uh, in order to optimize in certain markets, you want to make sure that you have as close to the payment provider as possible. So Kenya, you want to make sure that you are not leveraging a third party who has an integration to a third party who has an integration into Safaricom.
Yeah.
You, if you can, you want to be directly integrated to Safaricom. Uh, if you cannot, you want to make sure that the third party that you're using has, and you might want to even add a second third party because there are indeed nuances between each and every PSP. And that's again the Kenyan example. And then we're looking at all of the interesting markets, but for now, as a startup, you have to focus.
Yeah. Yeah.
And one of the lessons that I learned from Agin was when they expanded, to use the business 101 terminology, they thought globally, but they really acted locally.
Yeah. Yeah.
And from a payment standpoint, that means boots on the ground,
Yeah.
integration with all of the relevant local providers in order to truly be able to offer that holistic offering to your clients.
Makes a lot of sense. And, right, you have to focus. And, some companies have found that South Africa is big enough for for to do well in. And, it makes sense. And maybe South Africa and a couple of other markets, and you're good. And so, you go where the business takes you. You don't have to be
Exactly.
committed to this, Pan Africa if it doesn't work. But I'd want to ask about, like, you want to say something?
No, I was going to say, but what I'm hopeful
Yeah.
of is that within the next 5 to 10 years, you will actually have like the PABS card rails where you can passport a license from South Africa to Tanzania to Egypt.
Yeah.
And I really hope, I don't know the exact number, but I think it's around 17 to 20 of the central banks across the continent that are part of PAPS today. And I really, truly hope that within the next 5 to 10 years, it will be upwards to 40 and they will collaborate a lot more and offer sort of one rail for any payment methods that one license can cover to make it more European-like. You still need to have some integrations here and there, like to Safaricom and Wave, etc. But that's my hope, and let's see.
Yeah, let's see. I think the jury is out on that. I think my view is that charity begins at home. Like, what I'd like to see is that modernization of payment systems in country first.
Yeah.
And then thereafter you have a framework for actually uniting them, right? And I just think sometimes these large visions from a practical perspective, who do you hold accountable to? Like, who is responsible for ensuring this thing works, right? And that's
Yeah.
where sometimes this challenges. But I'm digressing now.
But curious because because I'm curious to hear what are you seeing that happening in some of the markets already? I mean, again, you mentioned Tanzania in your newsletter, but are you seeing that digitalization happening?
Yeah,
or
I think
not?
it's happening. I think Namibia is basically almost planning to run on UPI
Yeah.
infrastructure. They have an agreement with the National Payments Corporation of India. In Kenya, they have made it clear that they're upgrading to some new instant payment system. Exactly when, I don't know, but it's clear. Ghana has GIPS, Nigeria has NIBS.
Mm-hmm.
I think the South African Reserve Bank recently said that we have to take a stake in Payshap,
Yes.
right, and have a
Correct.
say in the fees, and that's the right thing to do. And so I think it's and I wrote about it recently. It's just a realization that's happening that infrastructure for Africa is moving beyond roads and bridges and schools. Like there's a digital infrastructure that needs to be built, and if you
Yeah.
don't build it, then a huge chunk of your population is left excluded, right?
Mm-hmm.
And whereas a private company may not necessarily care about like exclusion, right? They may say that they do, but if you're not making money from a specific segment, we are going to ignore it, right? So I think governments are slowly coming to that realization.
Yeah. No,
Yeah.
I agree.
So let's see. But then now back to you. Um, where do underlying reals matter? Stablecoins have been said as this big thing that is going to solve world hunger. Where do you see them helping? At least are you experimenting? Are they in your roadmap? What are you seeing, and does it even matter because you're predominantly solving domestic payments?
Um, it doesn't matter. Absolutely.
Mm,
I think stablecoin is the way that I describe it. It's being hyped right now.
mm,
Like buy now pay later was being hyped during COVID,
yeah.
and it's because people are now realizing the the ability that a stablecoin has,
Mm,
especially in emerging market.
mm, mm,
The best example that I can share is we paid one of our freelancers who's based in Kenya, and 1/3 of the overall fee that he charged was taken by the banks.
mm,
Um, it cost us 12 euros to send the transaction,
mm,
and of course, the corresponding bank in Kenya charged him a significant amount as well.
mm.
And it took about 7 days to get
Yeah.
there.
Yeah. Yeah.
Stable coins can reduce the cost and increase the speed significantly.
Mm, mm,
And that's really where the stable coins can play a vital part from a treasury management perspective
yeah.
as well, and sort of remittance.
Yeah.
From a developed markets perspective, like in Europe, I could send funds via bank transfers and it will show up instantaneously on the other person's bank account, regardless of the country,
Yeah.
because the rails here are so developed.
Yeah.
The other question to your part about Njiapay, are we looking at it? Yes, we are.
Mm,
But right now, from what we are prioritizing is more of the pay in.
mm,
That's where we're not prioritizing stablecoin as a product
yeah.
offering,
Yeah.
because it's not important to the clients.
Mm,
Peach recently announced an integration with Money
mm,
Badger
mm,
around crypto payments, and of course, if Money Badger and crypto payments would grow and become 5-10% market share within the checkout, we could easily add Money Badger
mm,
as a provider and payment method
yeah.
in our ecosystem.
Yeah.
Or if we would have a large enough client saying, hey, we want to enable crypto because a lot of our users demographic is asking for it,
Yeah.
then we can enable it. But stablecoin per se, for where we are sitting in the ecosystem, is not part of our immediate roadmap. But of course, as a fintech nerd,
Yeah.
I keep close track on it.
Definitely. And so what's in the near term for you guys? Are you raising anything soon? What does that look like?
Yes, we are actively talking to investors
Yeah.
right now,
Okay.
and I think there are a handful of VCs out there who are very interested, and let's just leave it at that. No, we're talking to them, and it's exciting.
Yeah.
But
No.
at the same time, of course, it's a necessary evil as a startup, right?
Yeah.
We need funding in order to grow,
Yeah.
and but at the same time, there's plenty of business to be had. And as a product payments guy, my main focus right now is just enhancing the product and helping our clients solve their payment challenges.
No,
That's what
it
excites me the
it sounds
most.
like VCs are throwing you checks and you're just being modest.
Not throwing. I wish there's. I mean, it's the one advice I would give that I got from VCs is raise funds when you don't need it.
Yeah,
That's
yeah,
the first thing
yeah.
that I've really taken to heart from mentors and even investors that have given me the same advice, right? And then secondly, it is time consuming. Let's not brush that under the rug.
Yeah.
Fundraising, unless you are, I think Ramp was the one who said that they were able to do it within 30 days. Unless you are really at that level where you have the scale and you have the traction, and VCs are really throwing you money.
Yeah.
And it was the same at Agent, to be honest, as well, where we had VCs knocking on our doors and they were very, very, very selective of when and who they were allowing to invest in the company. Unfortunately, we are not at that level yet,
Yeah.
but VCs are. We're talking to them as any startup is doing, of course.
No, thanks, Jonah. So this has been a great conversation. I think you've really broken down payments. You've really helped me understand some of the nuances and some of the real leverage points if you're a merchant or if you're a fintech that you really have to pay attention to and how the ecosystem works. No, listen, wishing you the best, man, and let's stay in touch. Thanks for being a subscriber and all the
Of
best.
course. Thank you for having me. It's been a great conversation, and I really appreciate the work you do.
Yeah.
I'm not saying this, but I read your newsletter on a weekly basis, and it's as a payments guy, it's remarkable how well you understand the industry as well. So keep up the good work.
Thanks, man.